Hello everyone, how's it going? In this video, we're going to talk about NIKOLA, trading under the ticker symbol NKLA. It's a very interesting stock to cover, and many people in the past have placed a lot of high hopes in this stock over the years. So we're going to take a look at the latest news and to see if it actually deserves to have such a place in your portfolio or to have a place at all. Before the video begins, if you like my channel, please don't hesitate to like and subscribe, and also to check out the links of my equipment in the description. Every purchase, and not just the items in the links, that is made using my links on Amazon will earn me a small commission, and that'll go a long way. Thank you for your support and your presence, and let's get started. So, NIKOLA. There has been quite a few excellent news for the company recently, and they are reflected in the stock price as far as the market is concerned. In a promising move to the logistics sector, J.B. Hunt Transport Services has recently announced an order of 10 battery electric and 3 hydrogen fuel cell electric heavy-duty trucks from the electric trucking startup. This development has been well received by investors, and it also signifies that Nkla has finally scored a significant win, given J.B. Hunt's signature as one of the largest providers of logistics services in North America. Nick Hobbs, the COO and President of Contract Services at J.B. Hunt, expressed the company's commitment in staying at the forefront of new technologies adoption and also more innovative solutions that they have, and to potentially revolutionize the freight industry. This strategic move aligns with J.B. Hunt's goal of reducing carbon emission intensity, and I want to say to reduce their dependency on oil price. So with all that being said, Nikla's stock price surged by almost 10% in early trading, reaching almost $2.50. And in comparison, the S&P 500 and the Nasdaq experienced a more modest gain, around 0.2%. At the same time, J.B. Hunt's shares enjoyed a positive uptick as well, increasing by almost 1%. The recent success of Nikola's stock can be attributed to several factors, one of which is the influx of orders it has received. More significantly, a previous order of 50 trucks from biotech resulted in Nikola's shares skyrocketing by more than 60% in a single day earlier this month. Despite these positive news though, it's crucial to acknowledge that Nikola's stock price has undergone significant volatility. Over the past 3 months leading up to this announcement, Nikola's stock has risen by approximately 160%. However, it should be seen in the context that the stock has been more or less down by like 95% or more from the record high above $60 back in June of 2020. So, with all that being said, the analysts have attributed a substantial decline to Nikola's stock value to slower than expected business development, the higher interest rates that we're all feeling right now, and the need for additional capital by the company. So the Wall Street current estimates believe that Nkla will need to invest in more than $1.1 billion in the business between now and the end of 2025. And at the first quarter of this year, Nikola's financial statements indicated that it currently has about $200 million of available funds. So, investors and industry observers are currently watching after Nikola's future performance as well as the success of its trucks, and of course its ability to cut off from a not so brilliant past. So overall, J.B. Hunt's Transport Services decision to purchase 13 electric trucks from Nkla does signify a notable step towards adopting eco-friendly solutions in the trucking industry. The positive market response to this partnership does reflect the investors' confidence in the potential of Nikl's electric trucking technology. Nevertheless, Nkola's recent stock performance highlights the challenges the company still faces in achieving its ambiguous sale goals and securing the necessary capital for future growth. So, moving forward, stakeholders, I think, will closely observe Nkola's progress as it strives to become a prominent player in the electric trucking market and pave the way to more sustainable freight transportation solutions. So, right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions instead of choosing ETFs. So, my overall conclusion regarding NIKOLA in the current stage is that the company will remain a stock under some selling pressure going forward, as many stakeholders still remember what happened last time they decided to jump in headfirst. This is why, overall, despite all the good news that we're talking about here, NIKOLA will remain a short term speculative position for those who prefer to risk their capital in the EV sector in particular. Of course, the worst of the storm is behind us, but it doesn't mean that we're going to see rainbows anytime soon. It might be a decent entry point now, as long as your total exposure is kept below 1% of the portfolio and that you're well aware that the market's perception on NIKOLA may not be as an investor, but more as a trader.